Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, July 20th, 2017. I made a couple mentions on the site, both in the trading room and the front page, that the railroad sector looks bearish to me, looks to be offering some trade setups right now. There aren't any pure play ETFs on the railroad sector that I'm familiar with, but don't believe there's any. There's not many. There's only about a dozen and a half publicly traded railroad companies that I'm aware of. So probably the reason. Either way, but there are some individual trading ops that stand out. So let's just start with the charts, obviously, of these index first. This is the DJUSRR, Dow Jones U.S. Railroad Index. Very clean bearish rising wedge, very well defined uptrend line, impulsive breakdown, negative divergence at the highs. We had divergence back here too. I should have marked it here. You can see there was a rising wedge and there was a breakdown. That was good for definitely good for a swing trade. And this one, at minimum, I see it dropping down to this first line. Obviously, all the lines on my charts are support or resistance levels. I haven't updated this chart in a while. So let's just say right now, this would be my maximum target. And when I say that, it's because the charts are dynamic. They change over time. Let's say the broad market rolls over, then that is more likely going to drag the railroad sector and the transportation stocks down even more. However, if this broad market just continues to advance for the next few months, then all I'm looking for here is a quick pullback, a correction, and certainly a tradable correction. These are levels we'd probably see reactions, but I can see the potential for a drop all the way down here, and that would be a drop from where we're at today of about 17%. But even if we just get a correction down to this level, I can even tell you this right now. My minimum target, I think, will probably come down here, and that's about an 8% drop. So there it is, clear, very clear bearish rising wedge. Breakdown is impulsive, meaning you see these red candles. That's what you want to see. You see a large spike in volume. So all the boxes are checked. I know the trend in the broad market is bullish, but again, this market, especially over the last year or so, has been one marked with a lot of sector rotation. So if you're comfortable shorting, if you want to do so for diversification within your portfolio, you're long tech, you're long whatever, long commodities, but you want a little short exposure, this sector looks good, just like the home builders to me. I'm going to show you a few of the stocks, and then we'll wrap this one up. No need to go too much into detail, but I wanted to give you some individual trade ideas because I believe that if you, within a sector, when the sector charts are bearish, as these are, if you go in and avoid shorting the most bullish stocks or those without clear chart patterns and only focus on the most bearish, you will outperform. So in other words, if I'm expecting an 8% drop, I can more than likely pick a handful of stocks that will drop anywhere from 12 to maybe 20%. So we're going to go through a handful of the individual components. Again, there aren't too many. This is just another index. This is a TC2000 charting platform, uses IX2250 as a symbol for the railroad index. And we have a listing of the components. So you can see there's a total of 17 stocks here, plus the index. So we're going to go through these. I have them sorted by market cap. That gives you more liquidity to short the higher names. You probably want to avoid these lower. This is only a $34 million company, and that won't have much of an impact on the index. But the big names, everybody knows. If you live in the States or in Canada, you've heard of these names: Union Pacific, Canadian National Railway, all these. So let's just look at those. UNP. There's your uptrend line, divergent high, and an impulsive breakdown. And I think it still has, excuse me, at least another 6.5% downside. That would certainly be a target that I would cover. Even if the sector is heading lower, I would put a very high chance that the stock has a reaction if and when it gets there. So, it's not going to be a straight shot down, but this is what I would expect here. And we'll just have to look at the charts at the time to see if this is a good long entry for the move up to new highs, or maybe just a bounce off support and then be on watch for a breakdown of this level. It's just too early to say. So first things first. But either way, that's a decent swing trade. Right now from where we're at. What did I say? It's almost 7%. CNI, Canadian National Railway. You can see a minor uptrend line here. You can see divergent high, see the negative divergence right here, and we've just broken down. And this is a common theme. I'm seeing a sector that's breaking down when I looked at those sector charts in the beginning, and I'm seeing the leading components, the largest railroad stock companies, all either breaking down or close to it right now. So CNI still looks like an objective short entry here. It's not too far below that trend line, but far enough below that it's very unlikely we're going to close back above it today. That's a 7.25% drop to that target, which is around $76. Again, that would be my minimum and current preferred target. So when I say preferred, all other things being equal, unless we see some increasingly bearish developments go on in the market in the sector, that's where I would book full profits. CSX, that still has a way to go before it hits this trend line, and it also has two pretty decent horizontal support levels there. However, if the sector plays out the way I think, here's what I would expect. I'd look for a move down here and a reaction either on this support level or this trend line, which roughly intersects. Maybe a little bounce there, ultimately a breakdown there, and if that trend line breaks, that will be a pretty significant sell signal. Now, has a little bit of support here to contend with. Who knows? Maybe a kickback to backtest the trend line. But if and when this support level goes, I don't know if you can make this out. Here, I'll turn up the brightness here for you. Volume at price histogram shows it does a good job of showing you these thin zones, and we have one there because there's a gap and with very little trade. So really this whole area here is a thin zone, and I would expect that to be filled if that top of that level goes. So in other words, what we're talking about here is ultimately again, if these charts continue to play out this way, and a break of this support level is going to bring us down to about the 38.50 or so level, and that would be a drop. If you're willing to ride out the counter trend bounces, about 23%. So a lot of meat on the bone. And again, at the very minimum, if we do hold support around the top of that thin zone, that's still an 8% drop. So pretty decent swing trade. Very nice RR on these risk to reward ratio. NSC, Norfolk Southern. There it is, starting to crack right now. Certainly offers an objective entry. There's a little gap above there. You can set your stop right here. Just over those reaction highs. Call it 124.50, somewhere around there. Maybe over the previous highs. Because I think this one you can see a big thin zone over here. I expect it to play out somewhere along these lines. Move down to here, bounce off support, and then another thrust down. Now, whether you want to game the bounces off support or not, sometimes you don't get a bounce off these. There are levels that I expect a reaction, but I think ultimately this one goes down here. So whether you cover, maybe reverse, get a quick bounce trade and get back in short, that's up to you. But most swing traders just short it, put a stop in, use OCO orders. They're great. One cancels the other. You enter the trade, you immediately place a stop above and your profit target to buy to cover down below. That's about a 16.5% drop from current levels. Certainly worth it as a swing trade. And again, talking about risk to reward. So if you're targeting 16.5% drop, using a 3-to-1 RR, you can allow for a 5, a little better than a 5% stop loss. This would be a 6% stop loss right there. So a little under a 3-to-1 RR. Still looks like a nice trade in my opinion. CP, Canadian Pacific Railway. I'm going to show you both sides of the coin here. If you're bullish on the railway sector and you think it's going a lot higher, then at the very least you have to acknowledge that it's probably due for a correction based on these charts. So if you agree with me on that, but you don't agree with how far they're going down, these are all support levels. But what I'm watching here, you can see this downtrend line, very well defined. So what happened with CP is it broke out, back tested that level for a couple months, and started moving higher. So an objective long entry would be on a pullback here. There is a minor downtrend to watch, which if that breaks, it's probably going to bring us down to that trend line. So a back test here, this is an objective long entry for those bullish thinking the stock's going much higher. That's trading 101. You go long at support. If it comes in for another back test of this downtrend line, you set your stop just below it. And there's a long entry. As far as shorting, not one of my favorites, so I'll just move on. KSU, divergent high right here. You can see the negative divergence. It's got, I think this one comes down at least to the trend line. That would be a drop of about, if it hits a trend line in that lower support level, about 3%. So not a tremendous amount of meat on the bone. There's also, see, the support zone defines all these reaction highs. So this one recently broke out to new highs. So again, the bullish case here would be come back in, back test that recent breakout, come in, have another reaction on this trend line. We already have 3, and then boom, off to the races. So again, if you're longer term bullish, there's your long entry with a stop somewhat below. Give it a little room. Sometimes they want to run the stops, shake out any longs before they run it back up. And if you are bearish on the sector, you want to wait and position short, or you can short now, with appropriate stops in place, and maybe add if and when that those intersecting support levels go, the trend line and price support. That's not, I'd have to zero in that target. So if you're interested in KSU, let me know. I really wouldn't say that's my price target now. I just happen to have that line there from a while ago. WAB, I don't see much on there. So a lot of these I won't spend time on if I don't see much. There's GWR, there's a downtrend line to watch. Bullish if it takes it out, but it just recently tagged that trend line. It's turning back down. So I think based on my outlook for the sector as a whole, I think we're going to come back down to that support level right there. It's about 63 or so, and probably bounce from there. Just whichever way this thing goes, this is really looks like a descending triangle pattern. So just watch for either an upside break or a downside break. There's also a minor downtrend line right here that may come into play. Getting too busy there. All right, let's move on to the next one. TRN, I don't see much. GBX, negative divergence. Sell signal would come on a break of that, or again, if you're bullish, you go long on pullbacks to this trend line right here, this uptrend line. So bear wants to wait for a breakdown to short it. Not one of my favorites, but let me try to give you a potential target. Let's see how this trend line might shape up. Only 2 reactions so far. I'm not crazy about that chart, so I'm going to move on. There's one that looks more bullish than bearish. You have a lot of support. You have some reaction lows back here, right about where we are now. Bullish divergence in place. So maybe runs on there, but again, not one of my favorites, so I'm just going to get away from that. All right, I'm not going to spend any time on any of these charts that I don't really have an opinion. FSTR, we're getting now down. This is a $212 million company, so a smaller cap, much smaller than the other ones. But let's see, what do I see here? Let's see, I'd like to add a line right here. There's that previous reaction high was taken out, but we failed. Most importantly, is this ascending price channel, and we have negative divergence there. So my guess on this one is a sell signal would come on a break below that trend line, especially an impulsive break down below, and probably come back into that support level. So that would give you a trade of a profit of about 20% or so. And the last couple, again, I don't see much. And just wanted to show you, as I mentioned in the beginning of the video, we don't have, to the best of my knowledge, they don't have a pure play ETF for trading the railroad stocks. So you can go with IYT, which is a transportation ETF. Now that's going to have railroads, airlines, truckers, things like that. So here's IYT. Right now, the story on that one, we had a bullish divergent low here. You can see the bullish divergence or positive divergence. We had negative divergence. This one trades pretty well to the technicals. It's, look for these divergent highs, trend line breaks. You had a divergent high, you had a correction. Then you had a divergent low, you had a rally. Now what do you have? You have a bearish rising wedge, very well defined. You do have negative divergence on the RSI, almost divergence on the PPO. It's about an equal high. Either way, we have a breakdown. So what I'm watching for here on the transportation stocks, this was a breakout to new highs. We had several reactions. This breakout failed. You can see all the reactions on that line. We pushed against it right here and finally broke out. So one or two things are going to happen. We've come back in. Maybe we're just testing the breakout. That's the bullish case. I hate to say I'm not on board with that case based on the fact this has even larger negative divergences. Let me show you something. I should have had that drawn out. You look at the PPO right here as well as the RSI. And you can see that this high was a more in fact, that's probably just that's simply an extension of that previous line. So you have a pretty powerful divergent high. And as you guys hear me say a lot, fewer things in trading are more bearish than a failed bullish breakout. So this was, on face value bullish. Obviously, I'm sure we had some longs pile in there. That breakout was lacking volume, wasn't very convincing. So if it fails, which I think it will, you're going to see the transportation stocks come back in probably quite a bit. So there might be a nice trade on IYT. And, trading the ETFs versus the individual stocks, you don't have as much risk for a gap. If a company has a blowout earnings and gaps up or down, that those gaps are mitigated in the ETF. But then again, when you trade an ETF, you're going long or short the most bullish and bearish stocks within the sector. And transportation, again, has those subsectors like I talked about. You have airlines, XAL, and here's the airlines sector, XAL, AMX Airline Index. Bearish, a very clean bearish rising wedge, very clean negative divergence. So I see the airline stocks due for a correction very soon, and that helps, to confirm my bearish outlook for IYT. I think at minimum, XAL is coming down to this 107 level. So obviously there'll be some individual airline short trades in there. Might cover those in a separate video or a static post. I'm looking for at least a 10% drop, and the potential's there for more, but that's my minimum outlook right now in the airline sector. Trucking. There's a couple indexes. We'll just look at this one here. You have this steep uptrend line. Trucking tends to move in these sharp rips and dips. These sharp rallies, at least a couple of them in the last few years. And, when those break, sometimes you have a kickback rally. I mean, this one you really might have been able to do that. Yeah, there's your trend line. So we broke and then back tested a little higher here. We broke down the uptrend line, back tested, and we're rolling over. There was a divergent high there as well. Right here, you look at the PPO, about flat to down, and right there, price is making a higher high. So there it is. You're looking at the three biggest components, I believe, of the transportation sector: airlines, trucking, and railroads. And I can make a case at the very minimum for a correction. Pull back maybe 8% or so, but with the potential for more. So I think there's some good trade ideas there that I went over in the railroads. And any trucking stocks or airlines that stand out, I'll try to add those as official or unofficial trade ideas. This has been Randy Finney with Right Side of the Chart.